All right, gang. After a freaking day like this, I think what we all need is a little bit of tighten in our lives. Sleepy boy. He's sleepy. He likes sleeping on my computer because it's warm. Look at you. You sleepy boy. You sleepy boy. You goofy chicken. He's looking at the computer right now. He wants back on the computer. All right. I'm sorry for waking you up from your nap, buddy. Oh, man. What is up, everybody? When Trey's Trades, we freaking talk fast and don't skip class like I preface by saying that I'm not a financial advisor or expert. So take what I say with a grain of salt. Let's get into the video. So today, my friends, my family, my fellow Gorilla Gang, I've actually got a surprising video mapped out for you. This AMC's red day today, down 8.49%. Now, this is something I'm actually genuinely surprised by. And I've always come out and I've told you guys that I think you've got some bearish movement on the horizon. And today's price action was definitely surprising. You got a little bit of a bull trap set up leading into yesterday on the hourly candles, but that doesn't justify this sort of sell-off, this systematic freaking down laddering that you saw here today that happened. But as always, when I get stuff wrong, I want to come out here and tell you that I got stuff wrong. And yesterday's video, I came out and I said, hey, I think you've got a pretty decent move coming up tomorrow, the next day or so. But I do still stand by my statement saying that when we break that level at 52.79, you're looking at that next big move to all-time highs. Now, when is that timeline going to look like? I don't know yet today if this is going to, dictate that you see that upcoming move in the next 1 or 2 weeks, as I did yesterday. But I will tell you this. It did break this uptrend that we have been on for quite some time. And I'm going to get into this more when we get to the TA later in the video. But we have to see how the trend plays out. I've got a couple of different roadmaps laid out just based on some TA and that sort of stuff. But we're going to go over a couple different things anyways. Give you a short update on the Ortex data, the short interest. It hasn't changed much, but I'll let you look over that in case you're new to the movement. I'm also going to go over the flow data, which is unusual whales, shows you the call options and the put options, long calls, long puts that are getting thrown into this stock, and then go into the TA, the technical analysis, so you guys can have an idea of what might be coming over the next couple of days to help prepare you mentally for those sort of moves, and you can make your own financial decisions in what you want to do with that sort of thing. But before we get into that, I do want to say this, right? Red days, green days, all that sort of stuff. Up here, you gotta stay freaking level, cool, calm, and collected, as the mass investor would say, right? These sort of moves can happen. And to be blunt, the entire market right now, very freaking shaky and choppy. There's a lot of indecision taking place right now. Now, keep in mind, AMC has a negative beta value, meaning that typically it won't respond to what the market's doing on any given day. But when you do have shakiness in the market, that is going to affect the psychology behind different people within the market, right? Which is the average retail investor, the ape out there. And I think it's really important to stay grounded in that, right? Good days, red days, green days, whatever, all the in-between stuff. It's easy to sit back, kick, and relax on the green days. But as I've said before in yesterday's video, right? Remember these hard times. I'm telling you, this is nowhere near the end of the road for AMC. And if 8% red day after a freaking 3-week string of green days is what's going to set you off, you got to take a step back, my friend. So let's get into the video. Just want to make sure everyone's, rocking, doing okay up here. Go have a freaking beer, play some golf, play with a cat. That's what I do when I need to take a chill pill. So, anywho, we've got the short interest data pulled up here. 19.26% is the current short interest of free float, and that comes out to about 98.53 million shares. So that's a net difference of about 3.3% to the downside. I've got the short interest trended out right here, as well as utilization. I'll talk about both of these things. But as you can see, the overall trend is still macroscopically going up. You have huge values that are being represented within the actual short interest of AMC based on 85% of the exchange reported FINRA short data. That is way more than enough ammunition to get this thing moving. And I'm actually going to show you a trend that I like on the TA, on the daily and the hourly candles once we get over to the chart. And I think it's going to settle your minds a little bit because I know it did for me. The short interest and the utilization go hand in hand, as the utilization is the amount of shares that are currently on loan compared to the entire pie of available shares for lending. And that utilization is currently sitting at about 90.47%. Now, notice this. The utilization has been going down for the last couple of days while the short interest is going up. And what that means to me is there are more institutions out there who are likely long stock, who are borrowing out those shares against their position because the risk for them is minimal, right? They get to collect the cost to borrow. Essentially, they're making a small annualized interest rate. And if you're making, 1.65% on that stock, and you lend out, 20 million shares, you're making a pretty decent amount of money considering the fact that the stock is currently trading at $47.39. So I wouldn't be surprised if you've got some big institutions out there that are doing that, considering that utilization is going down while the short interest is going up, because the free float hasn't changed, which tells you one thing, right? There's just more lenders that are willing to take on the risk of lending out stock to short sellers or people who would just like to take that share on loan. Cost to borrow, it's still doing a lot of this up and down stuff. To be blunt with you, it's kind of consolidating right now. It's really not going up a huge amount, and that is likely because that utilization is dropping. Now, I think you would actually see that cost to borrow go down if it weren't for the fact that we are on a macroscopic uptrend here for AMC. You look at some of the daily candles, very easy to see, right? The last couple of weeks have just been beautiful. You've just had a great string of freaking price action getting thrown together here with AMC. And before this, right, these two candles right here had two pretty rough red days in a row. You got this nice string of freaking 10 solid days to follow after that. So what you've got here rocking now is a very similar setup, right? Had a nice little string of price action, similar to this setup right here, to this nice green candle pullback. And I wouldn't be surprised you could see a pullback tomorrow. I've got this mapped out, but we're still on that uptrend, my friends. This is still looking good. So with that being said, that's kind of what you got rocking with the short interest data as it is right now, which leads me to the flow, which is what I want to show you next. So I'm going to pull up AMC and I'm going to show you the exact filters that I've got set on this so that you can see exactly what I'm talking about. The filters on this, I've got a $50,000 premium range, meaning that I want to see buyers that are stepping in with at least $50,000 to back their bet for a call or a put, because that basically is just showing me that big whales are moving money into this derivative. Now, what you can see here is that into the close, you had a pretty decent amount of calls, right? And these are all ask side, so it's no covered calls, no short puts, right? You're not hitting the bid side, whatever that, you get what I'm saying. So looking at the overall charts here, it was a pretty even flush, right? No bullshit, ever. I'm telling you how it is right now. There's a little bit of uncertainty, which is why I've got mapped out two different possibilities leading into tomorrow. It was an even Steven spread across premiums on calls and puts, so there's an equal amount of buyers and sellers that are betting on this going both directions, and just slightly more call volume than put volume. But the premium being dead split even leads me to believe there's just uncertainty, right? This could pull back for another day, and that's just how it is, right? I'm just telling you that right now. You look at the overall dates that are being targeted, and you can see that a lot of these puts are actually being targeted later into the year, back, more so into October and November, which I think is I don't know. I personally wouldn't do that, but obviously I wouldn't play a put on AMC to begin with, just because this stock can rip on a dime if it gets some sort of nice volume behind it. But nonetheless, that's what you got cooking up, which is what leads me into the next thing here, which is the overall TA, right? Now, I want to show you this on the hourly because I've got three different roadmaps kind of mapped out here. Now, what I've got here is a purple trend line, a white trend line, and a black trend line. You can essentially think of these as the three roadmaps that I think could end up happening based on the TA that I've personally done. Now, these green boxes essentially are just zones, which I'd call supply and demand zones. And this red box right here represents a supply zone. So supply meaning when it enters that zone, you have the possibility to see a rejection with a volatile move back down to the downside, to a demand zone, which essentially would be the opposite, right? You can expect buying pressure to ensue. Now, why is this important, right? Here it acted as a supply zone, right? It entered this zone and it sold off immediately. Bounced into a previous demand zone, bounced back up. Bounced into this supply zone, bounced down. Once it pushed through it, it pushed into the next overall supply zone, bounced back down. And you can see here that it hesitated once it entered this, now acting as a demand zone, which was previously a supply zone. And I would not be surprised to see it get it pushed back up. But if it pushes back down beneath this demand zone, there's another one right here, right? This overall demand zone, I've got these labeled, is basically roadmap one. Worst case scenario, bear scenario here, is you get a push underneath this 200 EMA, which is this purple trend line. It's the 200 period exponential moving average. And if it breaks beneath that into this demand zone, this is where I would expect to bounce back up, right? And I've got that mapped out for you right here. Something like this. Bounces down into the demand zone, bounces back up into the previous, now acting as supply zone, but was a demand zone. Second is this. It just gets a bounce straight out of this overall demand zone. And it could end up pushing straight through this, spot right here. I think you'd see some selling pressure, or it could reject right back down into this demand zone to ultimately get a retest back into that overall uptrend that we have been in for the previous couple of days. The best case scenario, obviously, is it bounces straight out of this freaking demand zone and just gets some nice price action back up into that $50 range. But I'm not gonna BS you guys. The picture between now and yesterday shifted a lot in terms of what the TA is doing. Right, there's the possibility for this trend to have ended right here, moving into essentially setting a new trend. I wish I could give you guys different information than that, but you're looking for a new trend to develop. I try to make my best case judgment on an overall trend, and this trend that we've got rocking right now, it broke, right? It broke the trends. So we have to wait to see a new one develop, which is why I've got these 3 roadmaps pictured out. It's essentially just what I think could possibly happen, right? I don't have a crystal ball. I can't predict absolutely to a T what is going to go down with the price action over the next couple of days, but that's what I think is the best case scenario, right? Just based on the things that I know. So uncertainty. I think the best way that I can put this is just looking at the overall flow coming into the stock right now, right? You had a massive amount of uncertainty. There's bulls and bears on both sides of this that are betting that this is going to go up, that it's going to go down. And there's no way to differentiate that, right? This is the end of this previous trend that we've watched play out for the last freaking 14, 16, 17 trading days. And now we have to watch a new one develop, you know? That just is what it is. That's the situation that we're in right now. And I'd much rather give it to you straight than try and pretend like you're going to see this thing freaking just continue to rocket, because this is an uncertainty territory. This could go in either direction. And these are the directions I think it could go in. Outside of that, the stock is what it is, my friends. And don't get this twisted with price action. I'm going to close it off with this. I've said this a million times. If you have conviction in a trade, right? If you think a stock is worth X, but the stock is actually trading at X minus Y. I think of Warren Buffett, right? You don't always have to pick the right stocks. You have to pick the right stocks and know what you're doing with them. You know, if you think this stock is worth more than it's trading at right now, you shouldn't be sweating an 8% drop, unless you're playing call options, in which case there's time sensitivity and that sort of stuff, which is why I always recommend not to play weeklies, right? It's entirely, and if you are going to, think of them essentially as a lottery. Do not allocate a large percentage of your portfolio to that, in my personal opinion. Obviously, do what you want to do, but risk management is everything, and I do not want you guys to get stuck on this. But with stock purely, right? With stock purely on this bad boy, you're not sweating this. If you think it's worth X and it's trading at X minus Y, do this number, rub your freaking hands together, pop up a bag of popcorn, eat some lemon pepper tendies, and bide your time. And that's what I've got for this video. So, blah, blah, blah. You know the whole spiel. Drop a like, consider subscribing, whatever you want to do, my friends. Catch you all in the next one. Much love, light taps, and peace.